Hey everyone, and welcome. I'm absolutely thrilled to have you here for today's explainer. We're going to take a deep dive into an absolutely stunning set of numbers recently released by a company you know really well. But honestly, you might be looking at them entirely wrong. We're unpacking Nasdaq's second quarter 2026 results. And let me tell you, this isn't just your standard earnings report, it is a literal masterclass in business transformation. I want to start right here. $86 billion. Let that sink in for a second. It's a jaw-dropping number, isn't it? That figure represents the proceeds from the SpaceX IPO, which officially became the absolute largest initial public offering in exchange history during this second quarter. And where did SpaceX choose to list? Nasdaq, of course. It's a massive win that totally sets the tone for everything we're about to discuss today. So to capture exactly how Nasdaq is evolving from a traditional stock exchange into a true high-power technology partner, here is our roadmap for this explainer. 1. A record-breaking quarter. 2. Capital access and SpaceX. 3. The financial technology engine. 4. Dominating market services. And 5. The recurring revenue shift. All right, let's dive right into section 1, a record-breaking quarter. Listen to this quote from Nasdaq CEO because it perfectly sets the stage for us. Notice that phrase right there in the middle, trusted transformation partner. They aren't just talking about matching buyers and sellers of stock anymore. No, they're talking about artificial intelligence, market modernization, and navigating these incredibly complex risk environments. They are literally positioning themselves as the foundational technology layer for global finance. And man, is that strategy paying off? Nasdaq just posted a record-breaking quarter with $1.5 billion in net revenue. That's a 15% increase year over year. But here's the real kicker. The solutions revenue, so the non-trading, technology-driven side of the house, hit $1.16 billion, growing at a massive 17%. They aren't just talking about transformation, they're actually successfully monetizing it with consistent double-digit growth. Which brings us perfectly to section 2, capital access and SpaceX. So we mentioned that gigantic $86 billion SpaceX IPO at the very beginning, but SpaceX was definitely not an isolated victory. Nasdaq actually secured 7 of the top 10 largest operating company IPOs in the second quarter of 2026. That translates to an incredible 74% win rate. Think about that. When the biggest, most innovative companies in the world are looking to raise capital and go public, almost 3/4 of the time, they're choosing Nasdaq over the competition. But you know, it's not just about IPOs, it's also about their index business. In Q2 2026, the average exchange-traded product, or ETP, assets under management linked to Nasdaq indices didn't just grow. It crossed a monumental, frankly psychological financial milestone, $1 trillion. That record $1.014 trillion was fueled by a staggering $109 billion in net inflows over the last 12 months alone. Investors are just pouring money into products that track Nasdaq's indices. Let's move on to section 3, the financial technology engine. What's really fascinating here is the sheer volume of activity taking place. The financial technology division delivered double-digit revenue growth in every single subdivision for the second straight quarter. They signed 58 brand new clients and executed 107 upsells. This proves without a doubt that there is a sustained, hungry global demand for Nasdaq's mission-critical tech. Their clients aren't just buying one thing and walking away, they're buying more and more deeply into the entire Nasdaq ecosystem. And a huge part of this tech expansion comes from their financial crime management platform, Verifying. They're actually rolling out something super fascinating right now called an agentic AI workforce. Okay, let's clarify this piece of tech jargon so we understand exactly what they're up to. Basically, they've deployed AI-driven workflow solutions, specifically an agentic anti-money laundering analyst and an agentic fraud analyst. So Nasdaq is actively bringing advanced, automated, intelligent digital workers to its clients to help them fight financial crime. How cool is that? And the market is responding with incredible enthusiasm. 47. That's the number of new small and medium bank clients Verifend signed in just one single quarter. Oh, and they also landed 6 major enterprise deals. This really showcases a massive grassroots adoption of this anti-fraud AI technology, scaling all the way from the local community bank level right up to massive global institutions. All right, on to section 4, dominating market services. So even as they completely transform into this tech partner we've been talking about, they're absolutely protecting their core fortress. Nasdaq maintains a staggering 75% market share as a single venue of liquidity for traded listed U.S. cash equities. That means 3/4 of that market flows directly through their infrastructure. And this dominance, well, it builds across other asset classes too. It isn't just domestic. They hold the #1 market share position in European cash equities. Plus, they hold the #1 market share in multi-listed U.S. options, capturing roughly 29% of that highly competitive market. So, the crucial point here is that this massive market share isn't just for bragging rights. It directly translates to their bottom line. Market Services generated a record Q2 net revenue of $340 million. Their traditional trading engines, which are largely driven by U.S. cash equities and equity derivatives, are running hotter and way more efficiently than ever before. Let's wrap things up with Section 5, the recurring revenue shift. Look, historically, exchanges lived and died by daily trading volumes. If the markets were quiet, transaction revenues plummeted. It's just a fact. That kind of volatility makes it incredibly hard to plan and invest for the future. So Nasdaq has very intentionally shifted toward the holy grail of modern business, predictable, annualized recurring revenue, or ARR. They want customers paying them subscription fees year in and year out for essential software and data. And let me tell you, this pivot has been remarkably successful. If we look specifically at their annualized software as a service, or SaaS revenue, you'll see what I mean. In Q2 2025, it was sitting at roughly $1.1 billion. Just 1 year later, in Q2 2026, it surged organically by 15% to over $1.22 billion. That is highly predictable, highly profitable software revenue just flowing in, regardless of whether the stock market is up, down, or going sideways on any given day. And to put a final bow on all of this, SaaS revenue now makes up exactly 38% of their entire annualized recurring revenue. Year by year, quarter by quarter, Nasdaq's business model is becoming increasingly durable. It's getting insulated from the day-to-day chaos of trading volumes and firmly anchored in long-term technology contracts. Which leaves us with this final thought. We've seen the $86 billion SpaceX listing. We've seen the rollout of agentic AI workers catching money launderers, and we've seen their SaaS revenue surge past $1.2 billion. So, with massive investments in AI and a 15% surge in SaaS revenue, is Nasdaq no longer just a stock exchange, but actually the ultimate financial technology company? I really want to thank you so much for joining me for this explainer today. The next time you see that ticker symbol cross your screen, I highly encourage you to look well beyond the exchange. Keep learning, and I'll see you next time.